Good evening, everyone. This is Ron Wheeler, Manager of Options Trading here at VectorVest, and it's my delight to bring you tonight's special presentation, How to Enter Your Income Trades. Now, this feeds off of what we talked about last week, where we talked about how to find stocks that were appropriate to trade for income opportunities. Now, you can do all types of different trading with those stocks that we identified last week. What we'll talk about this week is how to take one of those stocks and put it into a true options income trade, a trade to where we can make money even if we are wrong on direction. So we'll head over to VectorVest, and as we can see from the homepage of VectorVest, we've got two successive green lights. The color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. So with that in mind, we can go ahead and start looking for a bullish trade, because even though we're doing an options trade at this point, I still heed the guidance of VectorVest. So what we'll do is we'll switch over to the Unisearch. Now, I have a folder that I've created for our options paycheck students called URS Group Coaching. That's also our coaching for retirement services. I'm going to use a scan called Safe and Sound. Now, this is the same one that I pulled some stocks from in our last strategy of the week. We'll go ahead and open that up. Now, the biggest things that you will see, and of course, you can add these just like I showed you last week in the strategy of the week. What I've done is I've added a selection for I want to make sure that the stock is moving higher. So price, 1 day ago, stock high, greater than. I also added a scan for I want it higher currently than it was 13 weeks ago. That gives me my 3-month range, and then also 52 weeks ago. Now, another thing that I like to add is I like to add that I don't want to trade stocks in the drug sector, because those can be very, very unpredictable based on FDA announcements and all kinds of things like that. So for my coaching students, for my retirement, I generally take those out of the picture. So I'll click on Run Search, and let's take a look at what we find. All right, so we've got quite a few stocks to choose from. I always like to show the top 20, and we've got Align Technology, Target, Capital One. Now let me do this. In the upper right-hand corner, I'll simply click Graph All. So let's graph all, and I'll bring that over to my current screen. I'm running in dual monitors. Now here's Align Technologies. Over the course of the last year, it's been a decent stock. It's had some ups and downs. Earnings, they've kind of fallen a little bit. They've rallied, fallen. Let's see if we can find something a little bit better. So I'll go down. Target. Target has been a very, very good stock over the course of the last year. You've got great step-ladder earnings, and it seems to be rising in price. It had a 52-week high a couple days ago as the market came down a little bit, as did Target, but not too much, and now we're starting to move back higher again. We have a graph like Capital One. Not a bad graph, good-looking earnings. I would say I'd rather probably find something like Target that's making more consistent highs. Capital One's been trading sideways for, the last month and a half. I can keep going through the list. Nvidia, same kind of concept. It had a big correction. Now it's starting to move back up. In general, just so you get an idea of what I'm typically looking for, I like to get stocks that are in this sequence right here. That's what I'm really looking for the best that I can. So we'll go through a couple more just to get some ideas here. All right, Crocs. Now, Crocs is something that I could certainly get behind. That's a very nice, smooth moving stock, making higher highs. Step-ladder earnings approach, higher, up, higher, up, higher, up, and it's constantly rising. AFG, again, something I'd probably stay away from for right now. Even though underneath it all it's a good stock, it has been in the last month and a half not doing very much. WMS, Advanced Drain. This is another stock that I could probably get behind. Take a look. It's got nice stair-step earnings approach. It's been very steadily moving over the course of the last year, the last 3 months. It's a pretty good looking trend. But that's the kind of stock that I'm looking for versus the stocks that I'm not looking for. So not everything that comes up in the scan is going to be the perfect opportunity. You do have to weed through those and cherry pick, if you will. So let's do this. I think we found a really good example in Target. So let's take a look at Target, and let's set up an income trade for this, and let's run through a couple of different scenarios. First thing I'm going to do is I'm going to switch to our Options Pro software, which handles all of our options analytics. So let's go to Options Pro. I'm going to open Chart in the upper left-hand corner, and I actually was looking at Crocs earlier. I'm going to go in the upper left-hand corner again and click on TGT and hit Enter. Now this is Target. Couple of things I like to look for just as a general guideline. This is the options over and under price. Typically as a credit spread income trader, I like my options to be expensive. The more expensive the options are, the less risk I have on the trade. And when I mention risk, I'm really referring to monetary risk. As the premiums go higher and higher, the amount of money at risk is lower and lower. Now, this is simply implied volatility versus historic volatility. That's all it really is. And I seek out these high-priced options to do this trade. So now, let's take a look at Target, and let's take a look at what I typically would like to do in a trade like this. Now, we do have earnings coming in mid-August. That's fine. That's far enough away to perform this trade, so I'm not worried too much about that. What I like to do is find a place that's comfortable for me to do my spread. Now, to do my spread, I've got to have a couple things. Number one, I've got to have probability in my corner. Number two, I've got to have risk reward. So what I like to do is I like to look for a good compromise of probability and risk on reward. So let's take a look at this. If I look at Target, one of the first levels I see right off the bat is $255. I can place a trade at $255 that says if Target goes up, I make money. If Target goes sideways, I make money. And if Target stays above $255, I still have a chance to make money. And if it falls below $255, I should take an appropriate loss. Now, when I say appropriate, I'm talking not a big loss, an appropriate loss according to risk. So this is how we set up the trade. The next thing I'm going to do is I'm going to go to a risk graph. Now, I realize that for some of you that are newer to options, this may be a little bit confusing. So let's walk through some of the basics of a risk graph. So this is a risk graph of Target. Now, the first thing I want to do in a bullish market, I sell a put. So I'm going to go in the upper left-hand corner. I'll click on Edit Spread. I'm going to choose Sell. And remember earlier we talked about $255? I'm going to sell on August 20th, $255 put. And there it is. Now, when I sell this put, this is what the trade looks like. Now, remember earlier I told you as long as we stay above 255, we have a chance to make money. That's why this area is green. Because realistically, if we keep this option to expiration, as long as the stock stays above 248.75, we will actually make money if we let this option expire. Now, if we let the option expire and it's below 255, we would get put to the stock. That means we would now own Target. We don't want to do that. And a decade plus of options trading, like doing this, I have never once taken stock, and that's my goal. I don't ever want to take a stock. Now, the problem with doing this trade on its own is the fact that over on the right, you can see that I have a $632 maximum profit, but the risk is $24,867. If something catastrophic happens to Target, what's going to happen? Let's say the stock all of a sudden opened up one day at $240 a share. Well, if I sell this put naked, I would lose about $1,000. And if you take a look over on the right-hand side, this is my axis that shows profits and losses, and down here is the axis that shows stock price. So if the stock were to rise to 265, I can move my cursor up, and I can see that I would be up on this trade about $200 a contract. Now I can also turn on the crosshair, that helps a little bit more, and I put to 265, and you can see on the left-hand side right over here, if the stock goes to 265, and if it does that today, I would make $208, and if I let this trade expire, I would make all $632.50. Now again, the problem here is there's a lot of risk on the table. I don't want this risk. So what I do is I buy insurance. I create something called a bull put spread. And the way I do it is while I'm selling that put, I simultaneously buy an insurance leg. Now in this case, I'll use $250. Now I want you to watch what that does to this trade. Number one, I now have, if you look over on the right-hand side, $190 in maximum profits, and the absolute most I can lose is $310, and that would be if the trade goes all the way against me and I let it expire. Now, when we do these spreads, okay, we don't ever let the trade expire. Remember how I said as long as it stays above 255, we have a chance to be profitable? If the stock goes under 255, we take an acceptable loss. What is the acceptable loss if this stock went below 255? Now, if you see this dashed line, that dashed line represents how much I would make today on Target. So if Target were to rally today to $262.50, over on the left-hand side, I want you to watch that cursor window. If the stock were to go to $262.50 today, and I'll try to get it as close as I can, you would make about $25 today. If the stock were to drop to $255, and this is where we would exit the trade with a loss, I would lose about $47. Now, the way that we do these trades, this is something we discuss in detail in the options paycheck. We take profits at 50% of max profits. So if the credit on the trade is $185, we would be looking to take profits at $92.50. Okay? $92.50. Now, if this trade goes against me and we go to $255, I would lose $46. You have a $95 or a $92 profit target and a $46 potential loss. And as long as the stock stays above 255, this trade can happen and make sense. Now, that's pretty good, right? 255 and 250. Now, as I told you, I like to do the combination of risk reward and probability. So I want to show you that graph of Target again. I'm going to go ahead and open up the graph on Target. This is Target right here. Okay? Now, on Target, this particular trade was done at 255. So you can kind of see the graph over on the left and my risk over on the right. So as the stock goes up, I start making more money. If the stock goes down, I start losing money. What I want to do is I want to try this trade a little bit differently. How about giving us a lot more cushion? What if I do a 250, 245? Now, I want you to look what this does. Now, as long as the stock stays above $250 a share, I have the chance to make about $70. If the stock drops down to $250, I'm going to lose about $87. My risk is a little bit more than my profit, but historically, I have only a 9% chance that that trade will fail. That's the beauty of this. So think about what this trade does. We know that Target is a good stock, right? It's been going up very well. It did have a little bit of a downward move when the stock market sold off a little bit. But now I'm basically placing a trade here that I can make money if the stock goes up, sideways, or down. And if it goes below 250, I will only have a small loss. And I've put probability on my side. Now, this is something that if you've never done a credit spread like this before, it's called a bull put spread, you do have to get used to that. Most of the trades that you take will have a smaller profit than risk. But that's okay because you are going to make money a lot more often. And that's the beauty of this. Okay? So let's do this. Let's take this example of Target and let's put this into a trade. Now, I happen to use the broker Thinkorswim, and this is my Thinkorswim platform. What I want to do is I'm going to click on trade. Now, I always say that this trade is done as one transaction. So I'm going to go to Target. I will use my August 20th expiration, and there's reasons for that. It's in the proper form. It's a monthly option. I always like that. Now, I'm going to scroll down to where my strike prices are, and we decided on $250. So I'm going to go to my puts. I will sell a $250 put, left click. That tells my broker that I want to sell 10 August 21st 250 puts, but I also need to do my insurance leg. Remember, this transaction is done simultaneously. So 245, I'm going to buy the 245. So I click on the ask price, hold down control, click, and there you see right there. I am going to tell the broker to simultaneously sell and buy these options in one transaction for a premium of right now $1.37. And you can see on my risk graph over here, $1.37 or $137. That lines all up perfectly. Now, the last thing I have to do is I have to analyze how much risk on my account. Now, I generally do not like to risk more than $500 per trade. I trade a $50,000 account with this, 1%, $500. So generally, I don't like to risk more than about 1% of my capital. So as far as trade sizing goes, I want to make sure at that short strike, if it goes down to 250, I don't lose more than $500. So edit, let's do 4 contracts. Okay. At the risk, that's going to give me a risk of about 341. So actually, I can go a little bit more. 6, $831 credit. If the stock goes down to $250, I can lose $529 or $530. It looks like. So that's pretty good. $530 is not too bad. I can bring that down to 5 contracts if I want to stay perfectly below that. That would be perfectly fine. $692. I would be basically looking to make $350 on this trade with a risk, if it goes to $250, of about $430 with roughly a 90% chance of success. So 5 contracts, we'll do 5, and we're midpoint at 138, and we'll go ahead and confirm, and you're done. That's it. That trade, as you can see, has now been placed. It's as simple as that. Now, what I also do, and again, this is something we cover in the options paycheck in detail, is once I have my order filled, what I also like to do is place an order to exit with profits. So I just did 2, 3, 4, 5 contracts of target. I got filled at $1.38. I'm going to create an opposite order. $1.38. Half profits is 69 cents. We're going to go in here and type 0.69. A limit order, good till canceled. I send that out. And now I have an order to take profits that just sits there. You can also see that I have an order on my S&P position that to take profits at $1.10, and it's nearing that right now. Another thing that I can do is I can also set an alert in my broker. I don't use stops, but I can set an alert. Create an alert. If target, the stock, is at or below $250 a share, let me know. And what happens here is I will get an alert on my cell phone that it's time to take action in the trade and exit the trade. Now, that's basically going through the whole process. Now, it took me about 16 minutes to do that. Once you get adept at this, it doesn't really take that long. But the transaction, the process is not that difficult to go through and find and place a trade. Now, I know ultimately I did a 250, 245. The other trade at 255, 245, 250 would have been perfectly fine as well. But I chose this one because it gives me a little more probability, a little more room to breathe on target. Now, I hope you enjoyed that. That right there was a live presentation. So I didn't have a script to go by. I didn't have slides to go through. That was me actually performing a trade as I would do normally and placing that into my account. So hopefully that helps alleviate some of the fears of the complexity of the trade. Now, one of the things that I realized that I did in the Thinkorswim application is I forgot to put that contract size up. I right-clicked on the trade size, and since it got filled in multiple levels, I only put a stop in there for profits at 1. So I had to go back there, by the way, and adjust that to the full position. But that's something that can happen, when you're doing a presentation live. Now, what you just saw was basically how we walk through our 5-step process. We identified market direction. I looked at the homepage of VectorVest. Stock identification. I did a unisearch scan to find some of those great stocks. Option selections. I showed you some of the things like overpriced options. I looked at the graph. I looked at probabilities. I wanted to make sure that we had a lot of room to operate. Trade setup. Trade setup was about choosing the right options. I look at things like open interest, earnings, and where it's at and how close it is. Trade management. One of the biggest things I look for is risk reward. If I lose on that trade, I want to make sure the loss is very proportional to my gain. One of the biggest fears of being an option seller is, I've heard all these bad stories about one bad trade wipes out a bunch of winners. I've never had that happen. And the reason why I've never had that happen, it's very simple. I don't take trades where that could actually occur. It's not about being the best trader in the world and the best options identifier. It's about setting yourself up not to take those types of trades. And the reason we call this an income approach, and I want to bring in one of our previous attendees to our paycheck event who had just posted this on our Facebook alumni forum, Bobby. I want to share with you his story real quick. He had posted up on Facebook, and there's been a lot of angst this year about how the market's moved back and forth and things. So Bobby posted a day or two ago about, couldn't help, there was a general angst with the system, and I wanted to post this as encouragement for what it's worth and genuine thanks to Ron Wheeler. I couldn't be more than happy with the system and the results charted below. He took the course over a year ago, and they're probably not that impressive. I think they are, by the way, Bobby. I think they're fantastic. An approximate 20% gain on an initial $150,000 portfolio, an 88% win rate on 174 trades. And that is boastworthy. I'll disagree with him there. Now, here's the cool part. A lot of people say, how long is this going to do? He was able to accomplish this working 80 hours a week, keeping a 10 franchise learning center business from collapsing due to the coronavirus that past year, trading on average less than 30% the size of position he should be based on portfolio size. That prior point keeps me chicken. No, I think he's doing fine. There's nothing wrong with keeping your size low and keeping a couple of young teens on track. It just goes to show you that this can absolutely be done even with a busy lifestyle like we talk about. Now, he also mentioned that he knows there are many other and far better success stories scattered throughout this page, but his is one of my favorite because he's able to do this and work full-time, even more than full-time. For me, it's been fantastic, the wins and losses, and I can't wait to get out from the day-to-day of my business in order to be able to do more paycheck and other VectorVest strategies more full-time and really make some serious income. So anyway, Ron, thank you. Best 900 I've ever spent. And thanks to all the regulars in this group, which, by the way, is one of the cool things of our alumni group is you all can get together and discuss this going forward. If I ever learn to be half as much market as you seem to be, I can't even imagine. And here's the cool part. His gain loss. Now, I agree that this year's been a little more challenging than prior years, but he's hitting it out of the park this year. He's doing very, very well. Hasn't even had a lot of drawdown. I actually suffered some drawdown here in January as well, and he's had a nice smooth ride ever since that, and he's done very, very well. So I'm very proud of his results. I'm very happy for him and being able to manage that. And what Bobby's learning is that this can create that income. It's like a tap, right? When you need water, you turn the faucet on. When you don't, you can shut it off. Or if you just want to have water all the time, keep the water faucet on, right? Income opportunities are like a tap that you can go to anytime you need or keep it running. Now, in order to do what Bobby did and what I showed you, it's all included in the options paycheck. This is the fastest results to get this established into your portfolio. The paycheck course is a complete A to Z system to generate income trading each month from option trades so you can live the confidence and live the lifestyle you want without that fear of running out of money. Now, I'll give you a quick synopsis. The paycheck course is delivered live. It starts next week. It's also delivered via recording, so if you want to just watch recorded sessions, you can. In Module 1, for those of you that may have never traded options, we do an option foundation builder that gives you the basic level of options information to get you to hit the ground running. In Modules 2 and 3, I talk about the specific things that we need to do to build that trade like I did on Target, whether it's in a bullish market like Target, bearish market, or even a neutral market. In Module 4, I talk about why we like Target, how to actually go out there and find the trades, where to source them at, and what over history are the best trades to take. I also introduce indexes as well. In Module 5, we call this the Setup Maximizer. This is where we hone in on the options, make sure you're getting the most credit, the best probabilities, and really the highest rate of return. In Module 6, just like I showed you again with Target, I have a trade management plan. How much can I lose on this trade? What's my portfolio risk? How many contracts should I trade? Where's my exit with profits, exit with loss? How can I repair? And then in Module 7, I can't teach you every single brokerage, but what I can do is give you some information to say, hey, here's how we place the trades, and here's what to look for in your broker. Things like midpoints and things like good till cancel orders, etc. Now, for those of you that want to keep it even more simple, I also offer a bonus called the SPX Paycheck. This is done only on the S&P 500 cash index. It's one trade type, so you don't have to go out there looking for symbols, one ticker symbol, one setup rule, one profit rule, one stop criteria. A lot of folks just use this as their initial trade while they're maybe working full time. It's been a very successful trade for me over the past decade plus. I also will give you 7 live mastery support sessions. This is a way for you to really make sure you're ready to take the next step. Every week we teach a session live, and then I follow it up with a live mastery session. You can come in there and you can ask me questions. It's just a way, again, to make sure you're ready to graduate to the next module. If you can't make these, remember, everything is recorded. You can send me questions, I'll answer it, etc. That Facebook community where you saw that Bobby had posted, this is a group that's at first, all of the folks that are going through the paycheck class with you. After that, you get moved to our alumni forum. In the alumni forums, you see stories like Bobby, other stories, and other folks to help you, including access to me and my team. And every month in there for at least the next year, I will do a live Q&A. Now, I also give 7 weeks access to my members-only group coaching. Every Monday, I perform this concept like I showed you with Target live. I'm teaching people how to fish. I want to show you how to source the trade, show you how to set them up, what makes a good trade from a bad trade. You'll see me doing this in real time with real money. So again, if that options paycheck is right for you, go to www.optionspaycheck.com. This course will walk you through step by step everything you need to create an income stream using options, just like Bobby did. He generated about $30,000 the last 15 months using the system. You'll get to meet him in the alumni group on Facebook. So again, to get more information, go to www.optionspaycheck.com today. Registration closes very, very soon. And when you go there, you're going to notice a special price and a ton of great bonuses. Plus, we're so confident in this course that we offer a 100% money back guarantee. You can go through the entire course, and if you're not 100% confident you've learned how to tap into a brand new income stream, then let us know and we'll give you all your money back. So again, optionspaycheck.com today for all the details. Remember, registration will close soon. If you wait, you'll miss out. I hope to see you in class and help you set up your income stream. Thanks for watching. Good night, everybody.